Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts to talk. Today, we're looking at Quantinuum.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And before we get into today's stock, here is a useful tool for investors who want a faster and cleaner research workflow. You can check out stockanalysis.com Pro through the link below in the description. Use discount code ITP for 10% off.
Yeah, stockanalysis.com is lightweight, fast, and works on desktop, iOS, and Android. The free version is useful for checking stock prices, financials, charts, forecasts, and news.
But if you want deeper research, stockanalysis.com Pro gives you no ads, saves screeners, watch lists, portfolios, long-term financial history, dividend history, analyst filters, ETF data, and exports to Excel, CSV, and Google Sheets.
Exactly. Pro comes down to about $5.93 per month when billed annually after the discount.
For heavier users, the unlimited plan adds unlimited downloads and unlimited stocks per watch list and comes down to about $14.93 per month when billed annually after the discount.
Stockanalysis.com is a research tool, not financial advice. It does not tell you what to buy or sell, and it does not guarantee investment results. Always do your own research and make your own investment decisions.
Right. This is an affiliate link, so we may earn a commission if you use it at no extra cost to you.
Okay, so let's just get right into this wild June 4th NASDAQ debut. Quantinuum actually upsized their IPO to $60 a share.
Yeah, and then they opened at a 13% premium, right? Like hitting $68 right out of the gate.
Exactly. And, the order book was something like 20 times oversubscribed. So it wasn't just a successful IPO, it was basically a pure supply shock.
Right. It completely sucked the oxygen out of the room for every other quantum peer out there. We literally saw institutional investors liquidating their other quantum holdings just to, get the cash to chase this specific deal.
Because everyone wanted a piece of the new shiny object. It was like one of those exclusive sneaker drops where demand just vastly outstrips supply, so everyone is just scrambling.
Yeah. But we do need to look at the tape objectively here. Because, sure, the opening was explosive, but those shares faded pretty noticeably after the bell.
They did, yeah.
Which indicates some immediate heavy profit-taking from the early allocators. So it introduces this core tension we have to resolve today. Is this a truly foundational technology company, or are we just watching a scarcity-driven hype cycle?
All right. Let's move into the wealth-building context. Because to answer that, you really have to look past the immediate IPO hype. This isn't just another software startup building an app.
No, definitely not.
It's a foundational deep tech asset. They have a massive roadmap stretching all the way to 2029 for what they call their Apollo system.
Yeah, and they stepped onto the public markets with a massive war chest, right? Like $1.6 to $1.78 billion pro forma.
Exactly. So if you're taking a position, it functions as a pure play, long duration bet on the actual commercialization of quantum computing itself.
Sure, but a big bank account isn't the only thing that makes them unique here. For me, the practical angle is the U.S. government's equity stake.
Oh, well, right, the National Security Agreement.
Yeah, they have a direct equity stake, which essentially turns Quantinuum from just an enterprise tech play into a de facto national security asset.
Which gives them this incredible downside protection buffer that none of their peers have. Like the government basically can't afford to let them fail.
Exactly. Now let's look at the fundamentals, because if the government is treating this like a national security asset, we have to look at what it's costing them to build these machines. The revenue volatility is extreme.
It is very lumpy, I'll admit that.
Yeah, so fiscal year 25 revenue grew like 34.3% to $30.9 million, which sounds great. But then Q1 2026 just collapsed by 73% year over year.
Down to 5.2 million, right?
Down to 5.2 million from 19.1 million. And alongside that tiny revenue, they posted a staggering Q1 net loss of $136.6 million. That is massive cash burn.
Right, but you have to understand that the revenue drop was mainly due to the timing of the Icon contract. With Enterprise Quantum, you're signing massive, multi-year, milestone-based contracts, not monthly software subscriptions.
I get that, but $136 million burned in one single quarter.
Sure, but reframe that cash burn for a second. It is a deliberate, fully funded bridge to the future. They had $762.6 million in cash pre-IPO and roughly $1.68 billion raised overall.
So they don't really need to dilute shareholders if there's a macro downturn.
Exactly. And they had $79.3 million in FY25 bookings. They're spending this cash to build an unassailable technological moat with their quantum charge-coupled device, or QCCD, trapped ion architecture.
Okay, let's talk about that architecture because it is dense, but it's the whole reason for the crazy valuation. This trapped ion approach is totally different from the superconducting chips competitors use, right?
Oh, completely. It essentially isolates the atoms in a vacuum using electromagnetic fields, so there's virtually no crosstalk or interference.
Which means way fewer errors.
Exactly. Their Helios system just achieved an industry-high 99.921% average 2-qubit gate fidelity.
Wait, that's huge. And didn't they also hit a major milestone with logical qubits recently?
Yes. They became the first to implement logical qubits with higher accuracy than physical ones. That basically proves their error correction actually works at scale.
And on top of the hardware, they have that open source Guppy programming language. It's basically a Trojan horse strategy.
Oh, 100%.
You give developers these free tools to build on, but you keep the core hardware IP strictly proprietary. By the time enterprise clients are ready to deploy, they're completely locked in.
That brings us to the Catalyst timeline, because the market is going to want to see near-term proof that they can actually monetize all this brilliant tech over the next 3 to 12 months.
Right. The Q2 2026 earnings are coming up in August or September. What do they need to hit?
They really need to see a revenue reacceleration print above $20 million. They have to validate that the Q1 trough was just contract timing. Plus, everyone is waiting for pre-announcements about the 2027 Sol system.
Yeah, any news on Sol could be a massive stock mover. But I'm also looking at the macro view, specifically the forced passive buying.
Like the ETF inclusions.
Exactly. Quantinuum is inevitably going to be added to major indices and ETFs like QTUM. That forces institutional buying into a very limited pool of shares.
Oh, and you factor in Chip Act funding plus potential interest rate cuts.
Yeah.
That lowers the discount rate for pre-revenue tech, making those 2029 cash flows look much better today.
Speaking of the future, we have to touch on that unconfirmed speculative rumor about IBM spinning off their quantum hardware division, Anderon, to an open foundry model.
Right, the idea that Quantinuum might form a strategic partnership there.
Yeah, if they can use that foundry to accelerate their trapped ion fabrication, it could change everything.
Now let's pivot to the chart. Because all these catalysts are colliding with an extreme supply and demand imbalance created by the IPO structure.
Yeah, the thin float. So for the listener, they only floated 28 million Class A shares. That is less than 10% of the fully diluted share count.
Which is microscopic for a multi-billion-dollar enterprise.
It really is. And we are seeing a strong institutional support base holding firm around that $60 psychological level right now.
And remember, that 20x oversubscribed order book. That unmet demand didn't just vanish, it's still sitting there. With a low float, any positive catalyst, like a defense contract win.
It could trigger a violent gap up.
Exactly. Or a massive short squeeze because the supply of shares available to borrow is just severely constrained.
So what does market sentiment look like? To me, it feels like this massive tug-of-war between awe at the technology and absolute terror at the valuation.
The valuation is definitely a huge sticking point.
Yeah, analysts are just balking at the 410 to 500 times trailing sales multiple. That is a massive nosebleed premium.
It is objectively expensive, but look at the institutional validation. It's heavily dominated by insiders and strategic giants. Honeywell controls 49.1% of the voting power.
And Cambridge Quantum holds what, like 32.5%?
Yep. Add in backing from JP Morgan, Mitsui, NVIDIA's venture arm, and Amgen. This is high-conviction, long-duration industrial capital. It is not fickle retail traders.
Now let's talk about the risks. Because that exact same industrial backing hides some structural landmines in the corporate governance, specifically the Up-C structure.
Right, the voting rights issue.
Yeah, retail investors have almost no voting power here, well under 10%. And then there's the tax receivable agreement.
The TRA, yeah, that one's a tough pill to swallow.
It basically means insiders route 85% of future tax shields directly back into their own pockets. Plus, there's the heavy reliance on massive, lumpy contracts like Riken we talked about earlier.
True.
But the real ticking time bomb is the massive December 2026 lockup expiration. Over 227 million shares will unlock and flood a market that currently only has a float of 28 million shares.
It's a huge supply influx, I agree. But it is a known, dated event. Agile investors can absolutely front-run it. And honestly, Honeywell's dominance means the company won't be run for short-term stock bumps.
They're aiming for that 2029 technological supremacy.
Exactly. Honeywell isn't going to indiscriminately dump their position and crater the stock price.
So with everything on the table, what's the final verdict? I have to reiterate my cautious stance here. The danger of that December lockup expiry And the extreme 500 times sales valuation leaves very little room for error.
I hear you, but my conclusion is bullish. I'm giving it a wellness score of 7 out of 10. It's an asymmetric upside play on the undisputed technological leader in quantum computing.
Even with the intense cash burn.
Yeah, because it's completely de-risked from a balance sheet perspective, thanks to that $1.6 billion cash pile.
I think the long-term view for me defines the target horizon as a swing trade or momentum hold heading into the Q3 2026 earnings. But it requires highly active management before the December lockup fundamentally alters those supply dynamics.
Definitely. It's not a set-and-forget play right now.
And here's a final thought to mull over before we wrap up. We talked about the government's stake. But if Quantinuum actually builds a fault-tolerant quantum computer by 2029, it breaks the RSA encryption securing the entire global internet.
Wow. Yeah, the cybersecurity implications are just massive.
Exactly. Whoever holds the keys to that hardware holds the keys to everything. So, what is the right valuation for a machine that dictates the future of global cybersecurity? Think about that.
That's a great point to leave off on. If you want to build a cleaner stock research workflow, you can check out stockanalysis.com Pro through the link below in the description. Use code ITP for 10% off.
Yeah, Pro comes down to about $5.93 per month when billed annually after the discount.
And Unlimited comes down to about $14.93 per month when billed annually after the discount.
Remember, stockanalysis.com is a research tool, not financial advice. It does not guarantee investment results, and you should always do your own research before making any investment decision.
Exactly. This is an affiliate link, and we may earn a commission at no extra cost to you.
And if this episode helped you, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua episode.